Good morning. Good morning. Sheesh, this morning is one of those mornings. As I was about to go live, my laptop restarted like 2 minutes before 8. Can you believe it? You know, the most important thing is always to remain calm and just take control of the situation, you know, if you can. Yeah, hopefully I did that. But yeah, and then I started the music and everything, and I think you could see the screen. But then I neglected to add myself to the stream, so you couldn't hear the music. So now it sounds like, Francois, what's going on? Nothing's happening. So yeah, I think it's because my hair is now getting so long. It's now doing whatever it wants to do. So it's waving, luckily not waving goodbye, but it is waving. And yeah, I'm just going to let my hair grow for as long as this lockdown lasts. And we'll see how it goes. Anyway, today we talk about fee models. Really excited to get into that as well. I think it is important for us to have that discussion. A lot of people are wondering about it. And as I said in the invitation that, you know, I think often people are struggling with how to put together fees and then also what to charge. Now, in this particular session, we are only going to focus on the fee model side. In other words, the different kinds of ways that you could charge fees and maybe what each one is good for, and a few thoughts of mine on that. I'm not going to be talking about whether you should be charging fees or not. I'm not going to talk about how you should change your value proposition and segment clients and all of that stuff. If you are looking to start charging fees, I'm also not going to look at strategies of how to implement this at all. There is another session that I want to do on business models and value propositions, which will be based on the business model canvas and the value proposition canvas. So I'll probably do that Wednesday or so, depending if there's another guest. But yeah, for now, definitely just going to focus on the different fee models that are available. And as I said, you know, it doesn't matter whether you are allowed to charge fees in your business or not. You can, you know, there's a lot of value you're going to get from this, and you can start thinking around already how you can start positioning yourself if that is something that may be allowed in future, number one. And number two is maybe you venture out on your own and you want to start doing these kind of things. You know, then that's something to also to consider. And also, maybe you can influence the business where you're at with the information that I want to share, if this is something that people will find or that your clients will find valuable. Because at the end of the day, it's about clients. It's not about ourselves. So, yeah, you obviously know all the stories by now. So say good morning. Let me say good morning to everybody that is here this morning. There's a whole host of people over on YouTube. So let me start there. Good morning, Quibus. Yes, it's a great morning and a safe daybreak. Yes, absolutely. He says it's an interesting topic. Then hello and good morning from Terence. Looking forward to this topic as I've started charging fees for advice already. Yes, you've done a lot of work on that, actually, Terence. And this is something that people need to understand, is that you're not just going to start charging fees. It is a process. You need a strategy. You need a plan. You need to know what people are looking for. So it's important. Raymond, good morning. Looking forward to another great session. Yes, thank you. And what's going on this morning? It seems like I also need a restart. So Malcolm Hendricks, good morning. Welcome back, Malcolm. I appreciate it. Khomotso, welcome back. Nice to have you here once more. Rizan, good morning. Welcome back. We are sure to chat later today. Khomotso says, also looking into charging fees. I'm all ears. Fantastic. I hope you have a notebook and something you can write on. Bongi, good morning, Bongi. Welcome back. Nice to have you here once more. I really appreciate it. Kevin, welcome back. May everyone have a blessed day. He says, yes, thank you very much, and a blessed week. Kevin says that he's been charging fees for certain services and have been charging financial planning fees for some new clients. I like that. We're definitely going to touch on that. Good morning, Chart. Welcome. Hope you're feeling all right and that everything's good on your side. Thank you for being here. Matthew Westbell. Yes, we are all well. I'm well. My family's well. Thank you very much. How are you all doing? I hope that you're doing well as well. Bongi, what is the right fee to charge? Yes, there we go. So you see, I don't know if I'm going to get exactly to that. Today, I want to focus more on the models, and then that's an introduction into more the discussion around fees. Good morning, Ian. Welcome back. Nice to have you here. Thank you for joining us. Niels Strydom as well. You've been here almost every single day. Hey, Jaco. Lekker om jou hier so te sien. Jaco Pinaar from Just. formerly from another company, but now he's at Just Retire. So Jaco, welcome. Nice to have you here. Wilco Jonker, Wilco, welcome. Nice to have you in the house. Adrian Jordan, good morning. Kobus says, Francois, maybe reboot your voice quickly. Yes, exactly. That's what I need to do. Alrighty, over on LinkedIn, there's obviously a lot happening there as well. Shlanganani, good morning. Frans Hatting, I know this is something close to your heart, Frans, so welcome. Neil Phillips, morning, Francois and community. Looking forward to today's topic. Yes, me as well. Good morning, Henny Bauer. Welcome, Henny. And Higu, môre, Francois en almal. Dankie, Higu. Lekker om jou hier so te hê. Lydia, first time I've seen you here, Lydia, or maybe first time you've said hi. Thank you very much. I appreciate you being here and for spending some time with us. Hope you're going to enjoy it and that you'll be back. Amanda, morning everyone. I hope you all had a relaxing weekend and wish you a very productive and fruitful week ahead. Yes, I swear I get like goosebumps, like all the, let's do it, let's go. I love it. Robert Lang, good morning, Robert. Welcome. Nice to have you here. Vuledzani, Gloria Dangale. Good morning. Welcome. First time I've seen you here. Very nice to have you in the house. Thank you for spending your time with us this morning. And Stefan, Mattia, welcome back. Ronnie Els as well, welcome back. Chart, you in both places at once like me. And then Peter Strijdom, Dominel, welcome. Dirk Groeneveld, welcome. Louis Jooste, Wouter Fourie, welcome Wouter. Nice om jou hier so te hê, baie dankie. Sureta Murray says môre. So, oh, yeah. Luckily I know Sureta is Afrikaans, otherwise it would have been more. So let's go, it's môre. Peter Lopez, welcome back, Peter. Good morning. Then Mario, welcome back, Mario. Thank you for all the sharing and the commenting and everything that's happening from your side on LinkedIn as well. There's quite a number of people who've been commenting and sharing and all of that. Amanda, John, Kobus Klein, Terence, Mario has been doing a lot around that. So thank you very much for that. So that's stuff that happens outside of the live chats. So I really appreciate that. All right, so quite a lot to get into this morning, as you may very well know. That's how I roll. So please remember to subscribe. This morning, I didn't check. I know we were I don't know if I should do this. We are on 266 subscribers this morning. So thank you very much. Slowly but surely, we're growing day by day. So if you're over on YouTube, please consider subscribing. I'll really appreciate that. And then also, as you know, please like and share and react to this video. It helps us get out there and let other people in your circles know what we're doing. So let's do that. I really appreciate it if you can help me with that. And from that point, we can move on. Then last thing before I get into it, just remember tomorrow, the invites will go out right after the show. Today is that I have Ryan Stramrud, and he's going to talk to us, or the interview is going to be around Mind Over Matter. But we're going to get into his whole story and what it is that he does and how, the things that he's learned with all his extreme adventure swimming expeditions and escapades and all of those kind of things. And you'll hear about how dangerous things sometimes gets and how they survive things that they shouldn't be surviving. So it's really, really an awesome thing and how he uses his mind to overcome all of these things. And I just thought, you know what, if he can do those kind of things, then we here on dry, warm land can do absolutely anything. So I'm really, really looking forward to having Ryan on the show. That's tomorrow morning. So that'll be Tuesday. What is tomorrow? The 21st. Am I right? I think it's the 21st of April tomorrow. I hope I'm right. Yes, today is the 20th. So on the 21st at 8 a.m. sharp, I'll have Ryan with me on the show. So don't miss that. It's really going to be awesome. He speaks all over the world. He helps a lot of people. So don't miss that. All right. So now I promise, I'm really going to get into the show now. So Mbui, good morning. Welcome. Nice to have you here. Thank you very much for joining us. And so let me just switch off everything that's going on here on the screen and then we can get going. All right. Cool stuff. Jaco Maree, welcome. Loffie, welkom terug. Surieta says it could just have well been more. So yeah, let's go. Okay, so if you want to start looking at fees and you want to consider about, what it is that you want to do and why, there's a whole host of things that one would need to consider. And there's people that's been doing this since the late 90s. There's people who's been doing this since the early 2000s. So, if you're one of those people that sort of feel that your clients will never pay a fee, then you are truly unique, because if that was true, nobody would be paying fees. And it often starts with our mindset and the way we think about it, and sort of the fact that I think the most or the biggest reason for that is that we don't know where to start. I think that is really, if you really get down to it, it's like we don't know where to start, we don't know what to charge, we don't know how to structure this. I feel out of my depth, and therefore my clients is not going to pay. I learned a long time ago, and I've mentioned this a few times on the show, that you always give someone else the opportunity to say no. We shouldn't be deciding for them. And also, one should be asking, if you really want to evolve your business and your value proposition and the things that you do for clients, then we should be talking to them about what is it that they want, because their needs and wants shift. I was telling my daughter the other day that, it's amazing that when we got here, when we moved from the Free State to Johannesburg, we lived I lived in Helderkruin for that first little bit. Then when they moved up at the end of that year, we lived in Wilgehevel, and we tend to be there in a certain area. Like when we moved here, there were certain things that I got to know, and that is sort of where I was. Then a year later, we bought this place in Krugersdorp, and then we started doing things here. Then we did things more in that area, and now as they build new things, you sort of move. So things never stay the same. I think that is sort of my point. And if we're not moving with the times, or seeing what is more convenient for clients and what is more convenient, and what is more in line with what their new needs and wants and problems and issues and challenges are, we think it always stays the same. It's always this and then this and then this. And we tend to look at life stages and all those good things. And then we decide, okay, this is where this person fits in. And then we put them in that proverbial box. And we decide that, okay, that's more or less what they are. But there are new things creeping up. I think there's a lot of value that one could have added in this time around the relief measures that is available to business owners, for example. There's one particular advisor that I have the privilege of working with, Kerry Moss. Kerry put together like 3 documents. The one was an article that she wrote to small business owners as a small business owner herself. Fantastic, talking up the optimism and the positivity, and that will be okay. We're going to get through this. This is what we need to do. I also don't know. The whole premise of that of that article was that, I also don't know where I am. I also don't know what to expect. I also don't know. But here's the thing, that we're all in this together. And then she goes on and gives a few tips and things to get through this. So that is very valuable. Then she summarized some of the things that are available to them, to help them. Just like 2 one-pagers, one about tax relief and one about the small business relief itself. Brilliant. Where to apply, what to do. You know what? She's not the expert probably in like how to apply and everything that's needed and all of that. But what did she do? While business owners maybe went into like, I don't know what to do. I'm not going to make it. How am I going to pay my staff? She was the one that went out and got these things together and added that value. So there are opportunities like that and things that we shouldn't miss out on to add value. But again, like a lot of people don't know where to start to do things like that. And then there are others that just go out and do. And I think, just to get back to, like, we need to understand how things are changing. The world has changed because of what's going on now. Businesses that has been doing well are maybe not doing so well at the moment. It's going to take them some time to get back to where they were. And some businesses are unfortunately not going to make it. And how are we adjusting and adapting to that? How are we adjusting and adapting to what we offer as value to the client? Because that sort of makes my first point that I'm trying to get to, is that it's all about the value that you create and then the payment that you get for that value that you've delivered. So first you've got to create value, and then you've got to deliver value. And the way you get paid for this should be in line with the value that you've created. There should be a direct link between the two, not just from a pricing point of view, but the method of pricing and the method of feeing, if you will. But what is important is that if we say, well, they must be aligned, It means that you can't do this and then use something completely different to pay for this. It's not aligned. And then my next question is that then like centered around the client? Are we really putting our clients first in terms of that when you look at this? And I'm going to go through a whole host of models with you today. I'm not pro one over the other one. I think what you're going to see is that, depending on the client, depending on the situation, there will be a fee model or possibly a combination of fee models that is going to work well for that client. So it's not choosing one over the other. It's not to say that this one is bad and this one, because also if you're going to link your value and your professionalism and all of that to the way you get paid, then there's a problem. Because it is not about how you get paid. You can't say that I'm fee-based and therefore I'm better than the person who's commission-based. That just doesn't make any sense at all if we do it like that. So as long as it's reasonable, the fees, and there is a link, as I said, between the two. Then there's one other thing that I sort of mentioned. I quickly use the word fee-based. But you will hear two particular words when it comes to fees, and that is fee-only and fee-based. And what is really the difference between the two? Well, in my opinion, when you're fee only, that is it. You only charge fees. The client needs to pay you directly. You do not earn any assets under management or commissions or any other remuneration in any other way than fees. So then you are fee only. Okay. The other thing that I think we need to consider is that we need to make a distinction between the way that we determine the fee versus how we get paid for the fee. Because that's the other thing. And that is sort of the fee-based model where we have the value that was created. Then there's the value that's been delivered. We can calculate what that value or the price for that then should be. But then how you get paid for it may be in different ways. But both are still fees. Okay, so the fee only means that you only get paid directly by the client. So no product, nothing in between. Fee-based means that you create value. You put a number on that value and a price on that value, but then you can get paid for that in different ways. So I think just as a sort of setting the scene before we really get into the different models, that you have that sort of as an idea for a background. I want to give you a very quick example before I move on to the very first. Before I move on to the first model. If you, and I always use this, so sorry again if you've heard this before, but if you go into incredible corruption, incredible connection, you want to purchase a laptop or a computer, whatever it is that you're looking for, you're not walking in there because you just, I got up this morning and thought, oh, maybe I must get a new laptop, or maybe I need a laptop, or maybe, no, it is because it is a vital tool in what it is that you do. The value that you create through using that tool is almost immeasurable, because without that, you can't really maybe function as a financial advisor. I'm not saying you can't completely, but chances are that laptop has a significant impact on your efficiency, on what you're able to do, the way you can connect and communicate, and all of that stuff that we've spoken about before almost happens through that. And you can do a lot through your phone. But let's just say now you need a new laptop because your laptop has now fallen out of date, or maybe something's gone wrong, whatever the case is. When you walk in there, you know what you want, you understand the value, you've got all of that. Then when you look at it, there's a price. I don't know if you've ever seen that. So there's a price and it says this thing is 15,000 Rand. And then in small print, they also then tell you, so that's the cash price. If you were to pay cash or just swipe your card or whatever it may be, that's 15,000. But then you've also got an option to pay it off. So you can get finance for it, or you can put it on your credit card on a budget. You can go get a personal loan for that matter and pay for that laptop. So you'll still pay the 15 to Incredible Connection, but you're going to pay interest in that to the bank. So it's going to cost you more, but that is your choice, okay? Because at the end of the day is that you're looking for the value, and that is what you're after. The way you pay for it depends on your budget. It depends on what you are open to and not open to do. What's going to be most convenient for you. So that's why you have these different options, because sometimes maybe somebody needs a laptop right now. They don't have the 15,000 right now. So then they allow them to pay it off. And you and I know that is not the best thing for you. But if you need that right now, then that's what you're going to do. And that is sort of to set the scene. And the same from our point of view, where we talk about financial planning and advice and admin and reviews and ongoing service and ongoing advice. At the end of the day, there's value. And from my perspective is how you get paid for that value. As long as that value is reasonable and that value doesn't put you in a position of conflict of interest, that you can focus on the client and you really put the client first. Whether you then get paid via commission or fees or assets under management or whatever it may be, it doesn't really matter. Okay. And I put a little like asterisk next to that. So it doesn't really matter. I think it does, because some things are more appropriate than others. But still, how you get paid for the value that you delivered and for putting the client first, does it really matter? I don't think so. Okay. So that was a long story. So let me go just see. Good morning, Shahida. Shahida is saying good morning over on the YouTubes. Let me just see what's happening over here on LinkedIn. Guys, and I must apologize. Like yesterday was a couple of good questions that I missed because I just can't keep up with all of the things. And sometimes I scroll through it and I don't really see the question. I will respond afterwards. Like Gustav Jenkins yesterday asked a great question on that episode, which I didn't get to, but I did comment afterwards, and I comment on LinkedIn so that everybody else can see it as well. But so if I do miss your question, then I want to apologize for that. I'm trying to not do that. Queba says he wrote an article on the remuneration models after studying global models, and you are spot on. It's about the models and how you are paid or charged clients. It would depend on the model you choose. In South Africa, it will initially be about the use of hybrid models. I'm happy to share the article here. You're welcome to do that. I also included a chapter on it in my gift RER book, which can be downloaded at Queba's Klein. Yes, guys, you're welcome to share anything that's going to add value in the comments. I don't want you to be selling stuff necessarily, unless it's something of really great value or you want to recommend something to anyone. You're more than welcome to do that. So like Quebus is doing here is perfect. Just there's value there. Go and look at it. There's the article. There's the book if you want to look at it. So you're more than welcome to do that. So awesome. All right. So let's get into the first model then. Let me just see. There's some more comments here. More people saying good morning, Nick, and good morning, Cole, over on YouTube. So thank you for joining us. All right. So let's get, obviously the first one I'm going to talk about will be commission. Okay. So let's talk about commission. For me, commission is there for a very particular reason. Okay. And I think one of the biggest mistakes we made, and I think it's just simply because at the time it was the right thing to do and it made sense and it helped with sales and it helped with getting more clients and being able to do what you do without getting too much sort of objection or having too a hard time to get clients to see you, etc., because they don't have money to pay you and all that good stuff. But we started doing financial planning for free. The FNA is what it started out as back in when I started back in 98. I remember Liberty's Blueprint, and it was all about, and even in 94 roundabout, I think it was 93, 94, 95 roundabout there when those Nostradamus ads was shown when they launched Blueprint, and they were telling like, we do this financial needs analysis for you and da-da-da-da-da. But all of this is for free. This is our value add to you. So we'll do this for free, and then you buy the product. And that's how the industry was built over years. I think since whenever we started, it was always been like that. But the FNA has sort of become more and more of a thing. And until such time as obviously then all the CFPs things came and all of that is built around that. But if you really look at what we're doing in financial planning, it's really got nothing to do with product so much. Product is one of the solutions and things that we can implement. And if you look at why companies are paying you, I don't think anywhere, and you can correct me if I'm wrong, but I don't think you're going to find anywhere in your contract that there is a need for you to provide financial planning advice. That's not part of your contract. No. If we look at what commission pays for, it is for product advice. So when you lead a client to a sale, so you need to explain to them, oh, this product is better, and then those benefits is what will be most suited. So you give product advice, and that's what you get paid for. Then you get paid for implementing the product. That's all included in the commission, because now that needs to happen. You're going to be the intermediary from that point as well. So you're not only doing the sale, you're also then filling in the forms, sending in the forms, getting them to go do their bloods, all of that good stuff. And then eventually this thing gets implemented or the investment gets started or, what happens if something is unpaid? You get a notification, so you can also phone the client. So there's a whole host of that happening. And then obviously the third part would be to service the product. So whatever you need to do in terms of that particular product. So those are the three things from my sort of view that is included, and that is what commission is paying for. Commission is not paying for financial planning. If you were to stop before recommending a product, that is what we've been doing for free now, and we've been proudly advocating that we're doing that for free. And that's great, and that is a business strategy. There are many businesses out there that does exactly the same thing. They give you this for free, hoping to sell you something else. I just think from a commission point of view, I've got absolutely nothing against commission. I think it is a fantastic way. If it wasn't for that, we wouldn't have had the industry and now evolving into a profession that we wouldn't have had that if it wasn't for that model. It is something that made sense. People got the help they needed. And yes, we did that. But now as value shifts over time, we need to consider whether, is this giving, I've got no issue with the commission on the product side, but this giving away of the financial advice for free stuff, I've got an issue with, because there's a lot of, that is where most of the value sits. And if I happen to implement the product, or that thing lapses, I still delivered the value. The fact that the client does not see it through is actually, besides the point in my opinion. The other thing about commission is that it's obviously premium driven. So the higher the premium, the higher the commission would be. So there's no real, like, if you've got a big client or a small client, it doesn't mean that it was more complex, okay? Because you could have two people, they both employed, married with children, they have sort of the same thing. The only difference is between the two of them is their income levels. There's not necessarily that, because a lot of people earn a high salary, they've got a pension fund, they've got some policies, and that's it. So it's not to say that now because they earn a lot of money that now suddenly they will have a whole host of other things. And I think I'm a bit digressing from my topic here. But the point is that for one person, you're going to earn 1,000 Rand. For the next person, you're going to earn 50,000 Rand, simply because they earned more and simply because it was the same planning, the same effort, the same time, everything. But there's not 100% link maybe between the way that we get paid for commission. But now if you go back to the three things that I said, that is what it's based on. It's for introducing that policy. It's for servicing and for implementing that policy. So I don't know, from that point of view, I guess it makes sense. But from a financial planning point of view, it doesn't necessarily make sense, because it can mean that you get under remunerated or over remunerated, or fairly, I guess. Okay. So that is commission in my opinion. And I'm keen to hear your thoughts on this. Nick says commission is a 2-year loan. Yes, it is. It is 3 years sometimes. Let me see quickly. Yvonne, I remember the blueprint model and training. It was so good. It was. It was really revolutionary at the time. It was brilliant. So an easy way to start charging fees is to charge an hourly fee for second opinions on portfolios. For people who aren't current clients. Most become clients after this, and you haven't worked for free. I'm going to get to that, Neil. I absolutely agree with you. Dirk says the problem is the amount of commission paid was not relative to the value added. Yes, that is the disconnect, Dirk, and that is sort of what I'm getting to. Some of these models are more in line with the value that was delivered, and some are less. But also, again, remember, now it is the choice of the client. Like we've had the laptop thing. It's my choice if I want to get a personal loan. It's my choice if I want to finance this. It is my choice. So, and I'm sort of already giving some idea of where I'm going with this. But from that point, I think it's important that I'm definitely not going to say, well, commission is a bad thing, because it isn't. A lot of people are able to get financial advice that they desperately need thanks to commission. So it's definitely not an evil thing, just like selling is not an evil thing from my point of view. All right, so the next one is assets under management, and we've got a little, let me just fix that. I don't like spelling this. It is so bad. Management. Let's see. Okay. Management. Yes, that looks right. So AUM, obviously, assets under management is where a lot of advisors are building their business around, and nothing wrong with that. I've said in a few other episodes that I don't know how sustainable this is in the long term, for the same reason that we've just discussed in terms of commission. That there's no direct link to the value that's being added. And I found this in practice, more and more, where people are challenging the rand amount that are shown on their statements for what they've paid for fees, because they can clearly see what they paid you in rand amounts, They can clearly see what they paid the list provider. The one thing that they can't see is the asset management fees, because those are usually in the pricing. So you can't see that. So I think what's going to happen is, where assets under management is going to work well up until a certain level of assets, but there's going to be a level in rands when it gets too much and you can't justify the value that you're creating and the value that you're delivering for that. And one of the things that I don't know, and this is something that maybe you can share that with me if you've had this experience or not, but I understand the model. Between us, everything makes sense, because what you want to do is you want to share sort of, like the insurance model. So your smaller clients are paying you too little. The bigger clients are maybe paying a little bit too much, but overall, you get compensated fairly for the work that you do. So they are cross-subsidizing one another. But if I put myself in the shoes of the client with more money, and they need to pay a certain percentage, and that percentage happened to be 50, 60, 70, 80, 100,000 Rand a year. If you go look at your top 5 clients on your investment book, what are they paying? May they, and I'm just asking the question, may they get to a point where they say like, but this, what I'm paying is whoa, this is a lot. I don't know if this is justified or whether this is reasonable, whatever like vocabulary they may use around that. So yeah, those are one of the things that one needs to consider. So for assets under management, it is so much more important to be able to demonstrate and confirm and communicate your value to the client, and there are different sort of ways that you can do this, because obviously one of the things you can do is that you've got control over how much you charge for assets under management from your point of view. So when I talk about assets under management, I'm not only talking about the advisor, it's also the LISPs and the administrators and those people, the fees that they are charging. And a lot of them have started reducing their fees. And even asset managers have reviewed their fees and have started reducing that. And, you need to look at that model and say, well, what is going to be fair and reasonable, like I've started off with. But at the end of the day, what I wanted to say was that there's sort of 2 camps to this. On the one hand, you've got the all-in asset under management fee. So this is particularly, I think, in businesses where they only focus on investments, or 90% of the things that they do, they focus on investments. So they only work with investment clients, and therefore we charge you a fee, but that is an all-in fee. So it doesn't matter what you need, what you want, when you want it, how you want it, we will just do it for you, because that fee covers all of it. Okay, so that is sort of, I think, the mainstream and how most people have positioned their value propositions around that. But then also you have sort of a tiered AUM fee on the other end, and then combined with specific other fees that you might charge in addition to that, financial planning fees, for example. So there could also be a blend between the two. So you would refer to an all-in fee or a graded fee in that sense. And also it's interesting to sort of see who are the people that would prefer one model over another. That's also quite interesting. And I want to share about that, as we go along. The thing with assets under management is that it's driven by assets. Okay, so as we had commission driven by premium, this is driven by assets. So again, it's got nothing to do with the value that you add. So in one year, you might add a ton of value, and in the next year, maybe there's nothing to do, so you're not adding value. So it becomes like, and let me just retract on that a little bit, because not to say that you never add value, or you do add value, because remember, if we keep people invested, we help them with their behaviors, their decision making, and all those things. I mean, that is where the bulk of the value sits. So we look at that critical functions that we fulfill, and that is what you should be paid for. The question is, is it then based on how much assets you've got with me? Does that really do that? And just also on this point, guys, just remember that my role, the way I see my role, is to challenge the way that we think and to challenge the way that we've been doing things for a long time. I'm not saying for one second that we've been wrong all these years. Definitely not. There's a reason why things work the way they work, and why clients actually did buy into this is because it works for them. But what I am saying is, going forward, looking at the next 5 or 10 years, where are we headed? Okay, how are things going to change? Where will we fit in? How will we fit in? How will we be remunerated for what it is that we're doing? Because what we are doing is shifting, as I said the other day in the episode about the future of financial planning, it's shifting away from product, and we're going somewhere else at the moment. And that's going to happen. And more advisors are going to see that, and more advisors are going to start to do that. So then getting paid in one way may not be as great as being paid in another way. All right. So that is assets under management. Raymond says, Nick, you hit the nail on the head. Yes, he does. AUM percentage is the casino chips of financial advice. It's interesting. Joe Duran, you say, I said that. I must go look that up. Cool beans. Okay. All righty. Let me just see. There's lots moving here on LinkedIn as well. Let me just see. I charge 1,500 plus, and I give a quote before doing any work. That was Peter. There was no choice. Franchise clients were not explained how it was worked out. Yes, no, that's true. But still, they still had a choice of doing it or not doing it. So I think, it's like we can't blame the industry if they did things that clients then went into and did anyway because they needed the things. So I think there's always that thing. This is not about putting blame at somebody's door as well. This is about just understanding where we are and how things may work in future. Voter says, stay away from charging per hour. You will limit your potential future income. You only have 8 hours a day. Yes, I'm going to talk about that in a second, Voter. I fully agree with you. So let's see, there's some talk going on. Yvonne says it's the costing of service to justify hourly cost, including risk one takes on. The bigger the client and bigger the loss, that should be the foundation from which to charge. Then, look, I think what you're touching on is so important, Yvonne. And when I get into the whole business models and things in the future, is that you need to understand your costs, your cost of delivering service, your cost of delivering advice, your cost of having the infrastructure. Because before you can do anything, you're going to need a lot of things that needs to be in place. And there is a fixed cost and there's variable cost. And then there's the other things that come on top of that, like risk and complexity and things like that. So definitely I'm in line with what you're saying. Carol says, good morning, Carol. I've looked at the scope of the work involved, the level of expertise and a sixth sense when determining a fee of late. The thing is, I think, and I like that because I don't think we should think that there's a science behind this. A lot of this is intuition. And remember, it's like anything. It's like what the client is willing to pay as long as it's reasonable for everybody. That is sort of the go-to thing. All right, so let's move on. Time is flying this morning. We've got so many people live at the moment. Thank you very much for each and every single one of you who's here. If you haven't said hi yet, please say hi. I'll appreciate that. All right, the next one is what Wouter was referring to is time-based. That is the other way. And this is usually, funny enough, the way that, and I see this in accounting, I see this obviously with lawyers, I see this in financial planning as well. That is the sort of, when people start charging fees, this is the model that they default to because it's easy to understand. And even, I work with corporates that insist on me charging an hourly fee. And I'm like, but no, it's about the value I add. It's not about how much time I spend, because if I'm very good at what I do, you're not going to pay me for what you're getting, because the quicker I can do it and the better it is, the more value you get because you didn't have to wait so long. But now you want me to charge an hourly fee. Doesn't make sense, right? So exactly the same thing from your perspective. It's like, it's the value you add that is important. So the time-based way is the last sort of thing in my arsenal. If there is no other way to determine how to charge somebody, then I would go to an hourly fee, and I've got that, and that is there. And a lot of times for things like consulting and things like that, if it's particularly like, let's say you've got a client where or somebody that rocks up with you and they want you to do something for them, but they're not a client, and it's going to be, I don't know, something specific. If there's no other way of determining what you're going to charge for that, then you can say, listen, it's fine. You can talk to me. I charge so much an hour. And then that could be sort of a way to go about it. And also what you can do with time-based is that you could have different fees for different things. So you could say for advice, you charge a certain rate. You can charge a certain rate for administration. You can charge a different rate depending on the seniority of the person that you're going to work with. If there's more than one person in your business, so you've got different levels of advisors. So junior, let's say a senior and an executive advisor. then you could charge different rates, just like lawyers do. So this is typically a model that comes from the lawyers and the accountants, and I'm sort of a lot of times saying to, even in our own accounting business, I've said to them, like, get away from this. I charge $3.50 an hour for bookkeeping. No, what is it going to cost to do your books for the month? And it is based on a whole host of things that we consider, but it's not about time. Because what's happening there is that, like, as you can integrate more things, think about this, the more you can automate things and the more you can get data automatically into your system, the less time you're going to spend, which is great. So the more effective you become, the less you earn. Doesn't make sense. Okay. So this model is obviously time driven. So if you want to earn money, you got to spend more time. As voters say, if you're a one-man or one-woman business, the problem is that you've only got so many hours in a day. So if you want to earn more, you got to work longer hours. The other way, there is a way to scale with time, is obviously to have more people in your business. So have you heard about we spend so much man hours? So it means, like, let's say that if you charge per hour, and now there are 3 advisors in the business, then they each, I mean, you can charge up to 24 hours a day then, because each of them can bill 8 hours a day, for example. So there is a way to scale it, but now it becomes resource intensive, it becomes management intensive. It's like a whole host of things. It just makes things more complex. So for the smaller advisor, I don't think that charging hourly fees, and the thing is that you need to be careful of, is that if you start off with charging fees on an hourly basis, it's going to be very hard to change the way you do it later on. Just as it is hard for you to change from commission to fees at the moment. It's hard. It's not easy, because how do I have that conversation? And again, I'm not going to talk about strategies of how to do this, but there's a way to sort of say, well, if I want to start implementing this, I need to do it in this way, and I need to start here. Because to convince existing people, if you're going to do the same thing, it's not going to work. Cole says, what irritates me is that advisors have been made to be the guilty party because of com received on expensive products in the past. So poor returns due to cost were all the advisors' fault. I fully agree with you, Cole. And this is why I said, you know what, there's nothing wrong with the whole commission model or the whole anything. And there was once that I sat with an advisor when I was still a manager at Liberty. I had a meeting with an advisor, and this advisor was just like bashing the industry as a whole, the companies, the this, the that. One thing that we need to really realize is that this is not, as I said earlier, this is not about putting blame in front of any particular party. If it wasn't for all of us, there wouldn't be an industry. Okay. Could we have done things differently? Could we have done things better? Absolutely. But we have that opportunity now to do that anyway. So for me, it's not about like, yes, it's the advisor, because the advisor was the face of whatever this was. Okay. We were the people that had the relationships directly with clients. We were the people that clients phoned when things went bad. And all of that is changing. It is definitely changing because of transparency. TCF, as much as that is or isn't a thing, definitely there is more of a focus on what is right and what is not right. And the more clients are getting to that point where they've had enough with poor performance, and they've had enough with bad service, they've had enough with promises that are not being fulfilled, the more they will seek out the advisor and the companies that they support that sort of falls in line with what is important to them. So I think that is where we are. For me, you know what, I'm very grateful for everybody that plays in this industry, because if it wasn't for all of us, I wouldn't have been here today. You wouldn't have been here today. So yeah, I definitely think about this. And also, it's like I spoke the other day about being in a marriage. You can't change the other person. You can only change what you do. What they do, the only thing you can do is decide, I'm not going to work with that company. I'm not going to do this. I don't like their philosophy. I don't like the way that they do business. I don't like their ethics or any of those things. It's your choice to work with them or not. And you can influence your clients to work with the clients because they've got a relationship with you. They don't care about the companies that sit behind that. So yeah, from that point, I think that's where I stand on that. And yeah, so definitely some interesting comments, but I agree with you, Cole. It's not simply so Dirk is saying the value add is not simply the advice on a certain problem. It is the whole value proposition and client experience you offer. Yes, and we've spoken at length about all of this during the last 30 days. So yeah, I think I've spoken about that at length. Yvonne says we need to heal from the past through doing what is right and meeting clients. As a last point before I move on to the next one is I just want to say that, I said this before, that in this business, we're in such a fortunate position where we can change the way we do things today. You can decide that I no longer do it this way, I do it that way, and you start doing it that way. You can literally turn things like that just through making a decision. So the next one that I want to chat about, I just want to see if so as I said, time-based is great for when you've got no other way of charging. So the next one then is what is called, well, it's a scope of work or the project basis sort of format. And this is great where you have to do that one-off work. And some of you have already alluded to this about how you do it, that you may charge a fee for somebody who's not a client. I think, Neil, it was you that said you charge 1,500 or whatever to do the second opinion or whatever. Now, this is the scope of work, because there's so many things that you could do, because you could be just consulting, just talking to them, just soundboarding with them. So that's one thing. So I'll get to something that's maybe more appropriate for that in some sense. But scope of work could work very well where you need to do one-off work. So it is something particular that somebody wants. Either they want you to give a second opinion. So that's great. So, okay, so here's the advice. What does that entail? And you can have a fixed fee for that, or you can look at it and say, what does this entail? And then you can say, well, to do this, I'm going to charge you 4.5. To do this, I'm going to charge you 1.5. To do that, I'm going to charge you 10. And this I'm not going to do because it doesn't fall in line with what we do. So you have that control over the way that you could do your that with scope of work. So this is something that you could use very well where you have clients who's got these one-off kind of needs or one-off things that you're going to do. You could also then use hourly if you wanted to. But again, it's about the value. And hourly there is no way that hourly can remunerate you for value created and for value delivered. There is just no way. Imagine if somebody asks you a question and you give them the answer and it took you 5 minutes to do that, but they save R1 million in whatever. I mean, how are you going to get paid for 5 minutes that saves somebody R1 million? No, that R1 million that they saved is worth a lot more to them. They could easily pay you 30,000 for that 5-minute advice, easily. Okay, and that's how we need to make that mind shift. Our mindset, we need to shift. Alrighty, so as I said, this scope of work thing, I think, will be, there's not a fixed fee for it. It will be complexity driven, and you will consider a whole host of things about. So you will consider how long you think it'll take you, but how complex it is. Do you need to get outside help in that kind of stuff? So scope of work will be great for that. Then the next one is fixed fees, and when I say fixed fees, this is like having a menu of services. So this is where you have your a la carte menu, and there's everything we do. Every single thing has got a fee, but there's a fixed fee for it. If you want that, let's just have a look there. That's what it's going to cost you, and there you go. So very simple, very easy. It's definitely another way that a lot of people go, particularly, I've spoken to some people on my podcast, which you can go and listen to. It's so amazing. You've got clients who's phoning you. I mean, they've got the option of phoning the insurance company themselves and changing things and doing things like that, or they can ask you to do it. So when they ask you to do it, then it's a service that you're providing. And often these are people who are maybe not your clients, or they are referrals from people who are your clients, but they themselves are not, So depending on the models that you've implemented, you need to charge them for changing a debit order and a beneficiary. And I'm not even talking about like, who should I make my beneficiary? That goes to advice. But what do we do in terms of that, and how do we charge for that? Again, you could have the hourly fee and it's admin and how much time you spend on it. Or you can say, listen, if you're not a client of ours and you want us to change your debit order, we'll do it with love. There's the 0800 number. You can phone them, or we can do it for you for 300 Rand or 500 Rand or 100 Rand or whatever it is that you want to charge for that. But that's really what the fixed fee is about. It's predetermined. It's clear. There's no story about it. It's the same for everybody. There is no difference from that. And it's sort of a catch-all, I think, approach to have, is that if you don't know what something's going to cost, you can at least refer to your fixed fees. You can also call it your minimum fees if you wanted to, if you just want to use it internally. This is not something that you'll then maybe make available outside, but when you need to determine a fee, you look at what you would charge as a minimum for the different things that you need to do. And then you can overlay complexity and things on top of that to say, well, should we be charging more or not? If you do a project basis kind of thing. or so on. You can also obviously have fixed fees for financial planning. You can have fixed fees for portfolio reviews. You can have fixed fees for many different things. So every aspect of everything that we do in the business could have a fixed fee. And you could, as I say, position that as a minimum fee versus maybe the fee. But that is another sort of approach to take. Neil is asking, does anyone here charge a fee for drafting a financial plan? I used to. I know a lot of people who does, because that's the value. And then even after that, there's a sort of a process that you can go through to say, there's the plan. If you want product advice, you need to tell me if you want that. Then only we'll do product advice. So you only do it on a generic level in the plan and make recommendations on a generic level in the plan. And only then do you then enter the whole product sort of sphere. But that is definitely something separate. And I'll talk about that in an upcoming episode where we'll talk about the different sort of parts in the process where we are adding value and whether it's a lot of value or little value or no value, and sort of then how you do decide whether you charge for that or not at the end of the day. All right. Cool stuff. Let me just see. So Kevin is asking, can you actually charge someone for changing banking details or beneficiary? Kevin, the question is, are you delivering a service? So if you go anywhere else and you do that, you can decide, I do this for free as a value add, not for free, but I do this as a value add to my clients, particularly if they're paying an all-in fee, for example, on assets under management. But what about clients who come to you who's not your clients and people who just want you to change something for them? I mean, are you delivering a service? Anywhere in life you go, even the person that brings you food in the restaurant, you pay them a tip because they deliver the service. They get a salary, but you pay them a thing. So in my opinion, absolutely yes. Okay, because you give them the choice. You can phone the company directly or you can let us do it, but now I perform a service for you. It's the same with us in our tax business where any of the letters of good standing or the foreign investment allowance, SAST never charges to issue those certificates. But if I apply on your behalf and I go through the motions we charge for that because it's a service that's being delivered. So it depends on your philosophy and your view. If you feel like commission paid for that, then you don't charge. If you feel like, you know what, I only charge people who's not my clients, then you do that. If you don't want to charge at all, that's also up to you, but I think different people have got different views on that. Cole is asking, how do you calc the value of advice? Identified incorrect business assurance structuring for a client. Don't know what that is, but estate duty would be more than, I guess you would say possible estate duty would be more than 1 million if one partner died. Recommended the amendments, fee versus value. Yes, so absolutely. I mean, for that, and you know what, when you work with business owners, they tend to understand about paying for stuff. It's amazing. It's like, I've also seen this, and I don't know if I should mention this or not, but let me just say it anyway. For instance, when I look at financial advice, the whole financial advice space, and I look at the accounting space, for example, in the accounting space, they have always paid for CPD. They don't get free CPD as far as I know. And they expect to pay for CPD. In the tax space as well, they expect to pay for it. And trust me, they pay much more than we pay in financial advice. On the financial advice side, so many advisors are looking to get their CPD for free because we are telling clients that they're getting financial planning advice for free and they get everything for free. And so we're also in that mindset of wanting everything for free. And it sort of comes down to, you know, a business owner as well. They get nothing for free. They understand about paying for value. So in this case, you know, you need to go and sit down and say, well, how complex, what is the value that we added? And then you should say, well, what would be a reasonable fee? And the amazing thing about this is that there's no formula to calculate it. It often starts with what you feel is right and what would be reasonable to them if you know them well enough. You know, it happens sometimes where I don't know what to charge. And I would ask the client, listen, but you know, what is this worth to you? You know how many times they've paid me more than what I would have charged if I went with just the normal way of doing things? So yeah, we shouldn't also be afraid if we don't know, because that's how we test and we understand where people are and what they expect to pay. Because through the experience and through what they've got, they already in their mind sort of create a thing of how much they expect to pay. in my opinion. So yeah, it'll be great to sort of hear everybody's comments on that. I think that's a fantastic question, Cole. Thank you very much for that. Alrighty, so then retainers. So obviously, a lot of people are looking at retainers, and Frans Harting shared with me a story at one point in time. I can't remember the details. I tend to be like that. I don't want to remember details. But it's just this story about this business who segmented their clients. They looked at the profitability of the clients, and they realized that, the tail, they don't want them. But they also didn't want to go to like, listen, we don't want to work with you, or we can't work with you, or we're retiring you, or we're referring you somewhere else, or something like that. And what they decided to do was to implement a retainer model and to say, listen, from that point onwards, we're going to start charging you a retainer fee to make it worth our while to look after your stuff. But you've got a choice. So you can stay or you can go, basically. And I'm putting it very bluntly now. But more than half of the people then chose the retainer, And here's where the retainer, a retainer is obviously, it's a fixed monthly or annual fee, however you want to position it. You also find this retainer kind of fees a lot in the accounting and tax spheres, if you will. But you're on the retainer. And what the retainer really means is that for that retainer, you can get a set sort of package of services, or a certain level of service, or, different kinds of things. So you could have very different kind of retainers for different segments. And with segments, I'm not only referring actually to the type of clients that you've got, or whether they're A, B, or C clients. You can have different segments in terms of their needs. So you can say, well, for this type of client, this is a retainer. And so you can sort of productize your services for different segments in your business. It's not always about who's my A and my B and my C clients. Okay, it's more about what are the different needs. Where the retainer model is very, very great and awesome and just brilliant is that where you have these DIY type of clients, but them, they do everything themselves. They buy their own ETFs, they buy their own life insurance products, maybe. They just have a view of doing it themselves, but they often want somebody to sort of just, am I doing the right thing? Just somebody to put a rubber stamp on it. And there's advisors there, there's time there, there's a whole host of things that can be there, but they're looking for a soundboard. And you could be that soundboard for them to say, listen, they can contact you once or twice or 3 times a year. And for that, they're going to pay a certain amount, and you may include certain things in that retainer. That is an option. Younger clients tend to like retainers for some reason. So definitely something you can look at. But the amount that you can charge for this retainer is value proposition driven. It's about what you do for it. So the less you do, the less you charge. The more you do, the more you charge. But this is typically not, and it could be for your biggest clients if they prefer that. Think about the assets under management discussion again. If you've got somebody who has 10 million Rand with you and they're paying you a whole host of money, but you've got a retainer package that includes everything, let's say for whatever amount, and it looks to them that that'll cost them less than the AUM model, they may want to opt for that, But there's a place for it. I can promise you this, that not everybody in your business, you're not going to build a retainer model business. Some people will go for it. Most people will probably not go for it. But it is something that you should have in your arsenal as an option for that. All right. Koba says, thanks for the tip, Francois. We'll make sure I do not pay you more than what you would have charged next time. Yeah, no, but that's how we learn. Remember, now if somebody pays me more, I charge more. So it is what it is. Alrighty, Kevin is saying to Nick, I need to revisit the contracts I signed with life insurance companies to check what services are required to perform. Does it mean that if you need to do that, it's a very important thing to do? Go look at those contracts for that. As I said before, what if you did not earn commission on that client and you just took over a client and there's 3 or 4 policies there that somebody else wrote that they're getting or the income for, you're not being paid for it. So should you now be doing it for free? Hell no. In my opinion, anyway. So, yeah. All right. And then another one is sort of the performance linked way. Now, this is the one that I will stay away from completely. But there is a way to say, listen, I charge you nothing up front. You don't pay me. You only pay when you get results. So whatever that may be, whether it is that results maybe you only pay me when I deliver and you are happy with this, or be it if I, and this is very dangerous to say, I will over the next 5 years get you this kind of returns. That is definitely something you want to stay away from. But those are the kind of things where you would look at performance linked. There's an outcome that must be reached, and only once that outcome is reached, then you get paid in the sense of that. So that would typically be a higher thing because you had to wait for your money. But the challenge here is that you need very specific, clear and objective measurements for this, because otherwise it's going to get into like you feel that you delivered and then the other person is going like, no, you did not. So it's got to be, so this is such high risk that this is not even an option really. But I wanted to put it in there to say, you know what, if you were considering performance linked kind of stuff, and even you'll see this in the asset management space where a lot of the asset managers are moving away from performance fees, because it's a problem. It is something that usually work in the favor of one, not really, it's not reasonable and great for everybody. So yeah, from that point. And so what do you think? How do you feel about the things that we've discussed? Sort of the different options. Is it something that's going to help you, or can you go and think about what would? Because the point that I want to sort of get home here is that the answer doesn't lie in any one of these. It is possibly, and I'm telling you, 90% of the time, a combination of 1, 2, or 3 of them together. It is not a one fee fits all kind of situation. You have to allow the client to choose which option maybe works better for them. And obviously you can obviously focus on a specific sort of fee structure for a specific type of work or piece of work that you need to deliver, but that is up to you. Guys, there is no scientific way, there is no right way, there is no wrong way. You need to figure out, and this is the thing where most people they're not willing to do that. Figure out what works for you, if this is something you want to do. If you are quite happy and comfortable with the whole commission thing, then that's great, because your clients obviously understand how you get paid and how that is, and they're happy with what they're getting. And that is the most important thing. We're so easy to go and say, well, that's not the way to do it. And just focus on how you do things. And if you can talk about how you do things and stop comparing yourself to other people, you will stand out anyway. But we don't have to be in the game of saying, oh, that is not right, and you should stay away from this and don't do this. Okay, you can do the same thing, but in a much better, more effective way, and something that's not going to sort of label you as the person who's just showing like what's wrong with the world. Focus on what you do, how you do it, what the value is for your clients. If you want to, talk about how you charge, then do that. But again, as I said, you cannot link your value to the way you charge. You cannot say that I'm more professional because I'm fee-based or because I'm fee-only, because it seems like fee-only is the holy grail. No, we shouldn't romanticize about this. This isn't about charging fees. It's about doing great work. It's about delivering the value. It's about delivering great advice, being client-centric, and then just be remunerated reasonably for that. That's it. Cool. That's my story for today. Thank you very much. Tomorrow, remember, Ryan Strumrud. Hope I'm saying his surname correctly. I must double check with him today. But yeah, so let me just end off with some comments here. Ian says, I heard a fantastic comment. If you don't value your services or self, your clients definitely won't. Yes. And often it's a confidence thing. I'm going to talk about all of those things. I can have a whole week just on this. Mark, nice to see you here. Mark Bullock. That's very dangerous because a Cat 1 license holders don't have any control over performance. Exactly. So that's why. So I mentioned it, but it's definitely the one thing to stay away from. It is, the others you can sort of look at, but from my point of view, you definitely need to stay away from performance linked. Carl, great info once again. Thank you for your efforts. It's a pleasure. I hope I challenged some thoughts and some thinking and gave you new ideas. But yeah, great stuff. Shahida says the session has been very informative. I agree that you will require a mix of remuneration methods. Yeah, because it's also about affordability and, all that kind of stuff. So it's not just as that's why I say you can't say that because I do this, I'm more professional than the next person. It just doesn't happen. Raymond, thanks, Ronso. So much valuable information for us to use when making our decisions. Very empowering. Thank you very much. In the presence of value, price is irrelevant. That's very powerful, Mark. And yes, I fully agree with that. So great comment. Dirk says a good discussion in future would be on the relief the industry is offering clients. Some is simple. Yes, I've actually had this, and I've had a lot of information being sent to me. My challenge at the moment is getting everything together. I'll be honest with you. But if anybody's got some form of a summary of this, of what is available from the different companies and what's happening right now, I will gladly have a session on that. That'll help me a bunch. Neil says another thought-provoking session is giving me an idea to work on. Fantastic. Thank you, Neil. Chad says thanks. Peter says I'm being cynical now, but there are certain asset managers who 5 years ago realized that returns could be muted, so they dumped performance fees and reverted to a fixed fee. They sold the decision as being some sort of philanthropic gesture. You know what? Again, yeah, I'm not going to criticize the different companies or be cynical or anything about it. For me, it's like we're all in this game. If you're in the game, be in the game. If you don't want to be in the game and you want to focus on what's not right, then make a decision. But from my point of view, it's that I want to build a wonderful profession, and I want to play my role. And whatever is wrong is wrong. If we do things right, the people who are doing the things not so right they will stand out like sore thumbs, not in a good way. And consumers will force them to change their ways. And it may take a long time. It may not happen as quickly as we want it to happen. Doesn't matter. I'm going to focus on what I can do and what I believe is the right thing. And I will work with the companies and the businesses that want to do the same thing. That is as much as control as I've got. So yeah, I'm all for what we're doing. Carol says, just for a laugh, I had someone send me a WhatsApp the other day saying he wants to pick my brain about whether it was time to buy Sasol shares. Needless to say, I provided him an analogy of a specialist doctor diagnosing him on WhatsApp. Value your expert. Absolutely. Don't be, Carol, yes. Sorry. This is going to become another half an hour if I go into that, but yes. I just want to see, I see Kobe says something about that voter said. Voter says pay peanuts and you get monkeys. Yes, and then Yvonne said, excellent point, Francois, the mindset of for free is a barrier. Yeah, and unfortunately, clients like hearing the word free. It's not as powerful as complementary. It's not as powerful as some of the other ways that we try and position it. But I think something that I learned from Quivers is give them a gift. If you saw the episode the other day, a gift is a very, very great thing to do. It's not free. There's still value in a gift, but something that's for free doesn't have value. And on that note, I'm going to end off with that. I'll see you tomorrow morning. Please join me and Ryan for tomorrow's session. I really appreciate you. Thank you for joining me again today and for listening to what I have to say. If you want to engage with me further, whether it's on LinkedIn or WhatsApp or whatever, you're more than welcome to do that. I really appreciate you. Thank you very much, and have a fantastic week. I'll see you tomorrow.